You know, as this year ends, as we hit new heights, I'd love your take in terms of where we stand right now with a handful of trading days left in 2020.
Well, this has certainly been a year for the record books. I think it's important in these kinds of situations to remind everybody what really did matter in 2021 and what might matter in 2020. I think the big story in 2020 was a belief that the vaccine was coming and that a vaccine rollout would matter. That's the number one story for the year. I think that's what motivated stocks most importantly. Elsewhere, number two, I'd have to say monetary and fiscal stimulus, particularly the Federal Reserve's stimulus. David, remember we started out with what? $3 trillion balance sheet, $4 trillion on the Fed. It's up to past $7 trillion. So we've essentially doubled the Fed's balance sheet. And the reopening. The market is now looking past the COVID winter towards a better 2021, a better, particularly second quarter. We had a lot of debates about whether the markets were overvalued or undervalued at this point. But the multiple, it's very pricey, very expensive on a belief that we're going to have a significantly better second half of the year. And finally, I just want to remind everyone about the liquidity situation out there. There's been plenty of money to buy stocks. That's not been a problem. That Fed QE program has been enormous overall, double essentially the balance sheet for the Federal Reserve. And I think that's the ultimate thing that matters. If you talk to anybody out there and say, if the Fed did not intervene with that liquidity program this year, would the markets be lower? And the answer is, heck yeah, anywhere from 20, 30, 40% lower. Finally, David, just on the earnings situation, I can't emphasize enough how much the market believes there's going to be an earnings explosion in 2021. If you look here, we had great numbers in 2019, $162 for the S&P. We dropped to $135 in 2020, and we're going to get new highs in 2021. We're going to be past the old numbers, 167, 170, 175. There's going to be an explosion in earnings, or at least that's what the market believes. And that, David, is what's animating stocks right now.
Yeah. And, of course, we've talked a lot, Morgan, about the multiples that we look at every day.
Oh, yeah.
Not just earnings, but also multiples to sales on some of these high flyers, not stopping many of the buyers from continuing to plunge in.
Yeah, multiples to sales, because those are companies that aren't, in many cases, especially when we're talking about some of these smaller tech companies that have been just incredibly high flyers this year on that whole stay-at-home, tech boom, COVID trade, if you will, that are not profitable. That being said, I think there are also a number of risks for this market in 2021 as well. So, yes, we're expecting, or at least Wall Street's expecting, this earnings explosion. But also, back to your point, David, valuations, what's the right price to those earnings, especially given the fact that the markets have arguably gotten over their skis, or at least some pockets of the markets have. There are also some key risks, right? We've seen investors taking bigger bets, bigger, more risky bets that I think is going to be a bigger story in 2021 in terms of some of the trading strategies that are out there, including some of the retail investing trading strategies that are out there. We've got the Senate runoffs next week. I think that's going to be a key thing to watch, too. What does a Biden administration actually mean for the markets, right? Are we going to see higher taxes? Are we going to see a rollback in the deregulations that we've seen, or I guess a roll forward, maybe I should say, in terms of regulations that we've seen under the Trump administration? And, of course, a lot of that is going to hinge on those results in Georgia that we get next week as well. So I think we just go on down the list. I mean, the other thing I'm keeping a close eye on, and I know we've been talking about this on the show quite a bit, and Bob, I'd love to get your thoughts, too. The dollar index, the fact that we've seen such a weakening in that dollar index, and yes, it moved back above 90 in recent trading sessions, but now it seems to be testing that level again here right now. And what is that going to mean when we talk about that liquidity situation, when we talk about monetary policy coming into 2021 with earnings, with the economy firing back to life amid the vaccine rollout? What is that going to look like in terms of inflation, and what does that mean for something like the dollar and also commodities, which we know move inversely to it?
Exactly. And I think the point here is it's affected the stock market in two ways. First off, lower rates, of course, affecting the dollar, lower dollar, but lower rates driving more people into the stock market. There is no alternative. You can't have 0.9% 10-year bonds and expect people to hold that in opposition to stocks for 10 years. So that's number one. Low rates, low dollar, driving more people into stocks. And number two, lower dollar has a tremendous influence on emerging market economies, not just in commodities, as you mentioned, Morgan, but also, of course, in their ability to export and be more powerful as exporters. So there you can see this, and you can actually see as the dollar index weakened over the course of the year. Emerging market economies like Vietnam started moving up. Vietnam is now at a new high. I know that's a small market, but you can go down the list and look at how well emerging markets have done since the dollar has been weakened, Morgan.
Yeah, absolutely. And I think just to that point, in general, looking internationally, man, we talk so much about the fact that we're at these record highs here in the U.S. equity markets, but just looking around the globe, the Nikkei, for example, I think is at a more than 3-decade high right now. It really speaks to the fact that we're seeing this surge in the markets more broadly, internationally speaking as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.